Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, everybody, good morning. Welcome back to another live stream. Back in the office this week, Monday, new week, and what an insane start to the week it has been. So basically, we had probably one of the most violent, intraday reversals that we have seen in a very long time here today. And the US stock market's not even open yet. But basically, we had some crazy, crazy headlines in both directions the last few hours. If you're just tuning in, we'll do a little bit of a calibration of what just took place, what this means for markets. Are we seeing the market bottom out, or is this something that we should very much look at skeptically? Well, let's talk about it. As we get started, if you could do me a big favor, help support the stream by hitting the thumbs up button, all that good stuff on YouTube. It does go a long way, and I really appreciate it. So let's talk about a little bit here. First of all, the headlines. In fact, maybe the easiest way would just be to read some. Trump is coming out and saying that there is a deal with Iran that could be 5 days or sooner. He says that, let me back up. Trump comes out today, says negotiations with Iran have started over the weekend and that they were good. Market absolutely skyrockets. Shortly after, the Iranian media puts out that no such talks had taken place. And this is a very, that's a pretty big which one is it moment. You're sitting there and you're looking at it and you're saying, okay, are we, and I actually posted about this in the Discord. I said it looks very interesting because shortly after, Iran says that there's no indirect contact with Trump, which is, again, a stark opposite to what was initially put there. I made a comment in the Discord. I said that the way the market is reacting, initially was sort of like Trump said it's going to, you have negotiations going on. Iran says, no, there's not. But the market is still elevated. So it seems like the market's kind of believing what Trump is saying here. Or at the very least, what this means is that the market sniffs that Trump wants this thing done and is willing to potentially come to the negotiation table with Iran and get something in ink, right? You can ask whoever you want. Everybody's political bias will tell one way or the other. Oh, Trump is caving. Other people will say Trump is getting what he wants. Doesn't really matter. From the market's perspective, the market wants the war over. And so if it looks like Trump is like, hey, this thing's coming to an end, and he means business, the market is saying, great, sell oil, buy stocks, we're back in business, right? That's at least what the mantra of this morning is. Can you believe it? Can you trust it? Well, the Iranians may be sensing he wants out and he wants out bad. But at the same time, they've got a ton of military stuff parked right outside their country. So it is a tense situation. We had the ultimatum over the weekend. You know, you have 2 days or we're going to start attacking power plants. That was from the Trump administration. But at least the way the market is reading this, look at the VIX. The VIX is plummeting down 10% today. However, still elevated at 24. So I would say this market is like relaxing a little bit, but still tense. He now says 5 days. Yeah, we'll see. We will see how this all plays out. Beautiful mustache. Oh, thank you. You know, I must ask you guys a question. You know, my wife actually is kind of approving it right now. So let's stay calm, everyone. Let's stay calm. Stay calm. So far, the wife approves. I'm not going to get comfortable because it could be gone by Friday, okay? Look, I don't make the rules. I just work here. But yes, for now, it's not up to me. I have a boss. Everyone has a boss. My boss is my wife. Anyways, S&P 500 been beaten down here recently, popped on this news. One little good news point is enough to send oil plummeting, the VIX plummeting. But can you believe it? If she says cut it, yeah, it's got to go. But so far, I think the bigger issue for me, and this is what will get me to cut it, because she's like, I like it, but I also like you either ways. At the end of the week, if it doesn't grow more full, because I haven't grown any facial hair in a long, long time, and I don't know what I can and can't do. If it doesn't start filling out a little bit, then I'll probably cut it. But we'll see. Nick, do whatever makes you happy. No validation required. Well, what makes me happy is the old expression. It is true. Happy wife, happy life. Trader Nick is a mock. Okay. Anyways, let's move on. Let's not make this all about me. Nasdaq is up 1.4%. S&P is up 1.4%. So you do have, I mean, and let's also be clear, guys. We were down when I was driving into work. When I left the house today, we were down 1.5% on the Nasdaq. Like we were down like 1.2% on SPY. And now you're up 1.4. That is a violent reversal. Like, look at this. 3% rally in SPY. That's an insane, or SPX. That is an insane move. And so you look at that and you say, okay, but does that mean we have broken away from this downward trend? And I would say no. I would say no, we can't rule out the challenges that are still in this market. Did he check oil? No, not yet, but I will take a look at oil. Chuck Norris bounce, let's go. Rest in peace to the man. Are you able to full Viking style beard? No, I'm kind of patchy, but you know, you do what you can. I have long hair up here. I'll take that. As long as I can, right? So from a technical perspective, let's talk about what actually breaks this downward structure, because I think that's your next question. So last week we broke the 200-day moving average. And again, walking into work today, I thought, wow, we are going to actually close violently below the 200-day moving average. Because Friday you did get a close, but you had a long wick on the bottom, right? You had a little bit of a rally towards the end of the day. And then this weekend was interesting. You gapped down, you sold hard, and then intraday you had the violent reversal up. But how this candle closes today, I think says a lot about where this market kind of susses out where we're going from here. What I mean by that, you have the 200-day moving average now being retested from the bottom side, right? So we've been talking about testing the 200-day, We've found bounces, but they got weaker and weaker, and then we broke it to the downside. Now you're testing it from this side. Is it going to be a retest, in which case sellers dominate and push it lower, right? Or is this going to be a situation in which we retest it and then we have the opposite case, higher low, and then we break it, right? That would be a very bullish shift in narrative on this chart. I'm open-minded because I don't have a short position on the indices at this moment. I do have a long position on oil. That is not looking good here today. So I'm all stopped out on oil, which kind of stinks. But to be completely fair, this was and remained a hedge position for me at that time. I have a lot of long stocks that are definitely very green today as well. So to kind of counteract that, the long oil position, getting completely eradicated, it is what it is. We just move on. Nobody, again, this is a perfect example. Nobody, I don't care what technical strategy or, fair value gap or whatever nonsense you want to throw on your technical chart. It doesn't matter compared to fundamentals and tweets and geopolitical updates like this. They just shock the charts. And so, yes, technicals matter. I'm not saying they're worthless. However, just don't overvalue them. Don't overvalue technical analysis, because technical analysis cannot predict exactly what's going to happen, what Trump is going to tweet next. If you find the candlestick pattern that predicts what Trump is thinking before he even thinks it, you let me know, because you will be the wealthiest person on earth. Nick, oil is giving a possible buy entry. What do you think? Yeah, so with oil, yeah, I thought this was the case. Oil's dropped down to a +3 on Edgefinder. We had a stronger reading earlier this year. Well, actually, throughout February, even into late January, I believe we were starting to get oil bullish setups. And for now, we have dropped back into +3 territory. What I don't love is that this inflation problem, there's an old expression in markets, which is the best way to fix oil prices, or let me say that again. The best way to fix high oil prices is high oil prices. Why? Because high oil prices, what they inherently do is, let's say everybody's gas bill doubles, right? If everybody's, you fill up your car and it costs you 2 times what it used to cost you. Most of US, and I know this is not everybody outside of the US knows this. Everybody thinks the US, everybody is like, just made of a bajillion dollars. We do have a great life here in general, but most Americans live paycheck to paycheck. It's just the reality of the world that we live in. I think it's like 2/3 plus of people live paycheck to paycheck. And so if you throw in there, oh yeah, by the way, your gas price doubled. What that does is immediately people have to pull their spending in other places. They're going to hold off on getting a new video game, going to a sports outing, going to restaurants. They're going to choose not to go to that concert they had been thinking about. They have to, right? It's not fun, but what does that do to the economy? Well, that slows down consumer spending, right? Because everybody's just throwing their money into the filling up their gas tank. So that slows the economy in a very negative way. And what does that do? That decreases the demand for oil, right? When the economy gets hit, it can start slowing the demand for oil. That is why spiking oil prices are one of the biggest concerns to global recessions. Because, and I know I gave the US example, but that is extrapolated globally, right? So when you have higher oil prices, it's not an immediate thing, right? We could have higher oil prices for a year, 2 years. But if you have that elevated oil price, what begins happening is it does do demand damage the longer it stays live, right? If you have 90 days, that's what I keep hearing all over the internet, 90 days of elevated oil prices will start to really impact the economy in a negative way. And I think that's why the stock market has been so under pressure here, is people are saying this conflict is not going away. Even if the conflict does come to an end, you still have significant damage to the region in regards to oil production capabilities. And so that's where people are saying oil will remain elevated for a while, even if this thing comes to an end. And that's going to be inflationary and put pressure on global economies. So that's why I think the stock market has actually started to make a move lower. Will that continue? again, keep watching those headlines out of the Middle East. And understand, yes, oil prices are way down here now, but they could rip through those highs once more. We've seen this story play out so many times. The head turning, changes in the political cycle or the news cycle, right, are so violent. They're so quick. So please be careful with it. VIX down 9.3%. The stock market is loving the idea that at least for now, it looks like Trump really wants out of this war and may here's my personal opinion on how this might go down, or at least what it seems like. It's not really an opinion. It just seems from my vantage point what's happening. Trump wants out of the war. He's going to decorate it as a U.S. victory. This is how by the way, this is not just like anti-Trump. This is how every politician does this. When you want out of a war, you decorate it in a way that looks favorable to your nation, but so does the opposing side. Everyone walks away acting like they were the winner. And so if this thing ends, Iran will go to its people and say, we had a successful, like they backed down, they couldn't handle the heat. And the US will say, they realized they were toast, they had no chance of winning, and it's over, right? And everybody will walk away a winner. So that's how I think this thing realistically, if it is going to end sooner, how that would look. So we'll see. We'll see. Anyways, I'll bring in my friend Ivan FX to the conversation here. He is in the backstage here. We'll talk a little bit with him about how all this stuff impacts. I know we've been looking at stocks a lot, but it would be good to hear from you, Ivan. How are you, man?
I'm pretty good.
Ivan, is this what does this do to the dollar? What does this do to oil outside of indices? What are your thoughts here on the development? And I guess I gave my little opinion there. Do you think this is signs that the war is going to end soon? What do you think?
No, also the effects of it was that it went into profit. Some of my trades, it just happened. The overall effect is, or the case is, the situation's not over. We still have our close straight. We still have our production is low or little. We still have 20% or so out of the system. Israel attacked Tehran an hour after this announcement. And they still have to make a deal, even though he says within 5 days. So just that optimism that he is willing to have a deal is the reason why the market wants to and will keep that priced in. So I don't know. I was very enthusiastic earlier. We had a lot of volatility, and now I'm like, the thing isn't over. We're still down.
Right. Yeah. And somebody said in the chat in response to my thought process of both sides walking away, claiming victory, it's unique to Trump. Not at all. Not even close. That is politics 101. I know there's a lot of people who, very much love Trump or very much dislike Trump. And my commentary is I'm not trying to sound pro or anti-Trump, but to be fair, again, Iran will walk away claiming victory. The US will, Israel would, right? It's just how leaders will always want to bring home a trophy to their people. They never, ever would say, we got crushed, right? So, Hitler got crushed and he, what, right? So like that's usually how that goes. So people will never, as a political leader, you have to, otherwise you just, it's political death, right? You are kicked out, you are immediately, so Trump would never. And again, I think that's how any leader would act. It's not a unique to Trump thing.
Isn't that what happened with Israel, Palestine, Gaza situation, that both declared some kind of victory? That is is it the goal with diplomacy, or with a good deal that where both walks away with some kind of achievement of that they have won, but nobody's actually really 100% happy or satisfied.
Exactly right. Yeah, because they can walk home and they can say, look, we got something for our people. And that is the appeal to both sides in regards to the ceasefire. You get to come home looking like a winner. Both sides do. even though then, third-party people will kind of decipher who the real winner was. So yeah, we'll see.
Did you guys declare victory in the Afghanistan war and in Iraq?
Yes. Well, I think, when we left, Trump blamed everything on Biden and said he, he gave a bunch of military technology to them, et cetera. But again, every single time that you have some sort of exodus of a military conflict, that's the pattern, is politicians will find a way to claim some kind of positive victory out of it.
Okay.
So Ivan, give me. We're looking at the S&P 500, and I want to move on from it because I know we got other things.
Yeah.
What is the probability? Do you think it is more likely that we are in the process of bottoming, heading back to something like 6,800, or we are going to head back towards those lows, let's say in the next few weeks? I'll give my personal opinion. I think that there's more likely that we see downside. I think that there's unresolved. However, as soon as I started hearing those ultimatum, April 2nd type things with this new, like, you've got 5 days, the market hates that in the short term. So I think that could maybe be short term, but then it does seem like the administration desperately wants out of it.
Mm-hmm.
What do you think?
I don't know. Can we call the bottom?
I hope you're right. For the sake of our portfolios, wouldn't be too bad if we got a bottom. So I guess we'll see. Let's move on to other, because we've got to talk about some other things here. I know you're a little bit more cautious on the dollar.
Yeah.
With the dollar, you pulled up euro dollar. Are you watching any other ones? If you were to fade dollar strength, where's your favorite spots?
Okay, so my theory, okay, there has been discussion within the group, right? Why am I dollar bearish? Why are you dollar bullish? Why am I not following EF and all the other stuff? For this reason, where we are today, where the question wasn't how long, the question wasn't, are we going to have a war? The question is, how long is it going to last until the tacos? And today is the time. So for me, I am spot on, or I am where I want to be right now. And you said technical analysis doesn't really work. I mean, in this situation, the one thing you can rely on, because fundamentals are old news, and CPI for last year or last month is old news, when you have this massive shock to inflation, to growth, to everything else. So, because we didn't have 20% less of oil production or supply last month. So to me, I just need a new lower low, lower high, and I'm good to go.
Okay. Yeah. So what about someone in the chat? Othmate says Aussie dollar longs fundamentally strong and benefited from the war. And I imagine what Othmate is mentioning there too is, of course, the Australian dollar. The RBA just hiked rates. They're citing that the geopolitical conflict is a more bullish thing due to higher inflation. They do a lot of business with China. However, the challenge there is, or maybe the benefit there, depending on how you think about it, it's positive in the sense that it benefits from the inflation-induced stuff. But could the Australian dollar take a hit if the geopolitical stuff moves lower? Or maybe the more fair thing, I would actually say, is maybe the Australian dollar looks okay in both scenarios, because you have sticky inflation, the geopolitical event, and even if the geopolitical event ends, the RBA is still much more hawkish than the rest of the group. Do you like the Australian dollar?
I really love Australian dollar, and I think that prior to this situation where were hiking and pricing to hike more, I think this even talks to another case of more Aussie dollar strength. Now, as I said, or I think I said it in the meeting an hour ago, I said all this depends on China. As long as China stays somehow awake and somehow doesn't crumble because of this, then then yeah, we are going to have where I think that Australia is going to have the benefit of the doubt if that is the case.
Sure.
We have seen a lot of strength coming into Australian dollars, so a lot of pricing has already happened. So there has to be new demand and new and higher interest rates. So it's what I would favor, it's what I would look for. But technically, as we talked about a bit earlier, this is a range. I don't make money in ranges.
Yeah.
So it has to give me something better.
Fair. What about the yen, Ivan? You're the yen man for a reason. We've got Japanese yen has been an interesting one. Yields are back on the rise for Japan. Or at least they were last week. Oh yeah, they are. The Japanese 10-year yield is up here today once more. What are your thoughts on all this? You've got US yields lower today. Japanese yields popped higher, now coming down a little bit, probably due to the cool off in oil prices. Japan is a big importer of oil. So what are your thoughts here?
Tricky situation because they have some reserves. They're also trying to make a deal with Iran on the side. I actually saw earlier today that they want to encourage investments in Alaskan oil production so that they can get the oil from there instead. But I mean, they are 100% dependent on oil from somewhere else. And I think they were in talks with Kazakhstan to get some oil. So they're trying to they're trying to figure their situation out. But of course, if this would have prolonged for a long time, of course, that would have been detrimental to the Japanese economy growth, which is already weak. I don't know how weak that could become. And the Japanese yen then becomes just stronger and stronger, and even locking them into whatever their situation currently is, only to become worse.
Sure. Yeah. And I think it's a very interesting topic, right, for Japan, because they've been oil dependent on other countries for a long time. And with this Middle Eastern conflict, I imagine that's sort of like the whole US trade dynamic shift last year caused a lot of countries to start like, okay, how can we diversify? How can we not be so, dependent on the US? Japan is probably doing the same thing, as you pointed out, drastically being like, we cannot be dependent on one place for oil, etc. So we'll see. The other thing, one last comment I wanted to make on the Australian dollar is longer term. I think that we're in a certain environment that is decently good for commodities. Not just the supply side shocks due to the geopolitical conflict, which is bullish for commodities on a bigger scale. The other one is sort of this worry about stagflation, right? Which is the idea of slowing economy, the stag, inflation, sticky, on the rise. That is an environment in which, historically speaking, on a relative basis, commodities tend to do well. And we know that the Australian dollar is a commodity currency, right? Huge exporters of raw materials, to the rest of the world. So could strengthen the currency there. So we'll see how all that plays out. I just thought that was worth also mentioning from a bigger picture standpoint. Ivan, we do have the stock market opening up in 1 minute to go here. And I think that that's a real tell, because when you have that 9:30 open here, that's 1 minute away. That's going to be when you have a huge surge in activity, in trading volume, and how that volume plays out could give us a little bit of a hint, a little bit of an indication as to if the market buys this, meaning the idea that the Trump administration is going to, push us hard in the direction of a ceasefire and get oil flowing out of the strait again, or if the market's going to say this is jawboning, posturing, and that 5-day thing is going to spook markets. So I think we'll get, you don't get the perfect answer in the 1 minute, but you do get some answers of volume, where it's going.
Yeah, and just a side comment here is somebody mentioned manipulation, and this is market manipulation, or moving the markets how you want them to act. And once you have the aggressor, I would argue, says we want ceasefire, I think you can take that seriously. Where we have seen the CFD coming up higher because of it, and I believe that S&P should also follow through. Now, are we going to rise fast and continue on forever higher? I don't think so, but I don't think we're going to collapse on it for that matter.
That's a good way of putting it. The whole aggressor defender type concept. Of course, hotly debated, controversial. I get it, but from a sense of the more powerful entity in this case, definitely the U.S. Right, militarily. Of course, Iran has the home field advantage, etc. But yes, that is a good point. The aggressor, the stronger of the two, wanting to potentially have some kind of resolution to this and even giving the 5-day, right? That also shows indication of like wanting this thing to be concluded sooner rather than later. And also wanting to not have to go that next level of because the US knows that if they start, getting more aggressive militarily, then Iran will also get more aggressive in their, attacking of energy facilities, etc. So it's an interesting time, to say the least. It's scary stuff, and hopefully we do have some sort of peaceful resolution. I just don't know exactly when we're going to get that clarity. And so that's why I am going to lean a little bit more on the cautious side. However, from a bigger picture standpoint, I continue to think that there's some viable dips in the market, from a longer term perspective.
Yeah, and my comment about calling the bottom, what we're looking for and what we looked for back in 2025, when we had the 2025, 2024, when we had the last year little debacle for a week or two, the market reacted kind of like, or for that matter, the trade war, as the market didn't go immediately higher, or for that matter, back in 2020 March, but it pauses the fall and it makes the market check and do balances and be like, okay, what do we actually have here? One, do we believe what Trump is saying? And two, what is the implication of the market? What is the implication to business is going to be like? And then at the end of the day, we see that he follows through, most likely with a ceasefire or reducing the risk in the market, and the market goes back to where's our profits, where's AI going, where is the microchips, and even though we have been talking about, I've been talking about that through, this war is China go to take Taiwan. If they take Taiwan, like it's another thing to be serious, to be confused about and worried about. But again, this is just how market reacts to something, and they will take time to adjust and adapt to the new world. And
yeah, Ivan, is gold a buy?
Yeah.
You think so?
Yeah.
Gold's gotten nailed here in the last week, especially. But you are looking at, we just narrowly missed the 200-day moving average, at least on the gold spot US dollar chart here. I'm very curious to see if gold is starting to put in a bottom. That candle today looks very aggressive. Very aggressive buying here, at least today. We'll see if we can hold this. But coming back to this long-term level of support, we are seeing buyers at least step in for now. And that's a heck of a discount in terms of where we've been. That's 25% off this morning on the price of gold. So we'll see how that plays out. What do you think? So are you thinking more of like short term, you think that thing is going to rip? Or do you think more long-term buy and hold type stuff?
Now, first of all, first point is that there's a discount. Second of all is that this war has shown that you need to be diversified. The Gulf is unfortunately not what it used to be, and they're going to fight hard to say it's safe. But if I was living in the Gulf states, I would be, should I have my money in the real estate? Should I have it somewhere else? Second of all, third of all, we are then going to look into less inflation in the United States, and that generally is is a gold buying opportunity? And number 4 is China still going to survive all this? Are they still going to be in a recession? If they are so, then you're still going to see central banks or people of China buying gold.
I would agree. I think for me personally, gold is a buyable dip, not necessarily as a short-term trade, but more of a long-term. I think this is the first time in a while where I feel that gold is on sale enough that I can start dollar cost averaging. Buy a little gold here, stick it in the portfolio. Again, I'm not telling you what to do as the audience. I'm just sharing my thoughts and opinions. And please understand, gold, there is nothing to say that gold cannot go much lower than it does. I'm not saying, it's an easy, obvious buy and it's going to the moon for sure. I think anybody who makes those sort of claims is either a fool or a liar. Markets are not that easy. They're very, very difficult to predict. Do I think there is a decent risk reward setup here on gold for a longer term hold? Yes, I do. I think there's good risk reward here. Thinking that, gold could continue to move lower. But the way I'd probably play this is I think I'm going to buy some shares. If we continue to see gold melt lower, I would love to get that 200-day moving average. But I may choose to buy a little gold and stick it in the portfolio and do nothing with it for a while. Because I do think longer term gold will likely rebound here. I don't know if it's going to go right back to the highs. It may not see those highs for, a year or two. But I do think, this is where I start wanting to build a position on it.
Just to clarify, one other thing that I said is what I said as a gold as a buy and as a yes, that has a lot of disclaimers inside of it.
Right.
It needs technical reversal. It needs that the ceasefire actually happens. It needs that what I just said as factors actually kicks in and starts doing quote unquote their job. And even if we start to rise, as we saw back in February, even though if you rise and everything looks like a nice beach in Bali, we can still have quite deep pullbacks. So even though if it rises, that is not necessarily a guarantee that market is not going to kick you out and take your stop loss along the way.
Sure.
So it's still need normal market trading conditions. You still need to have your strategy. You still have to do what your normal day job is. But don't go crazy about it.
Yep, I like it. Good stuff. Well, hey, Ivan, I'm going to back out and give you the floor here. Before I do, let me just remind everybody, hey, I mentioned it yesterday in my video. We're going to be doing an Edge Finder free week. It doesn't start today. It actually starts tomorrow. However, if you want early access to that, QR code above my my camera here, the Edge Finder free week. It is public access to everyone to try out our tools this week, starting tomorrow. However, like I said, we may be dropping a little bit of an early access if you do join the Telegram channel. So join there, turn on your notifications on Telegram, etc. We will have some information about that coming out soon. QR code right there, or link will drop in the live stream chat as well, if that's easier for you. Ivan, thanks for taking over the stream. Enjoy it, man. And thanks for the conversation. It was great.
Thank you very much.
See you, man.
See you. Bere Ansa says that is it fake news? No. So what has happened is that Trump has said one thing and Iran has said it is not true. We have not negotiated over the weekend. So it's not necessarily fake news or anything. It's just two different stories of the same thing. So could that be? And then at the end of the day, what is Trump saying is that he wants ceasefire, and that's kind of what we go off of. And then the question then is, are you going to believe Trump? And then you have two options: one, yes or no. But at the end of the day, he is the one that has called this war. He's the number two. He is the one who has initiated, and he is therefore the one to call it off. And if he calls it off, then yeah, then that's where we're going to be. So nothing really a lot. In the last few minutes, we have seen S&P 500 coming a bit lower. So it's not really Not really that much, but it is what it is. And what I say, and when I say is, um, I believe something should go higher. It has a lot of in between there that is not said publicly or said loudly with my statement, meaning that we need an uptrend. We need continuation. We need Trump to still stick to his words. He doesn't do another taco. Then we don't expect Israel to counteract what the US is doing, as Benjamin Netanyahu said yesterday that he said something that if US strikes Iran, then Israel will also follow suit, something in that direction. So if US says that they are not going to continue anymore, I would then expect Israel to also not continue. And if they decide to deviate from that, then we have a whole other situation that is not a part of my initial comment. Even if Trump calls the war off, it doesn't mean anything. It does. Iran will make sure it doesn't ever happen again. Trump is not in control anymore. Well, that's again a third option for the same situation, because that's not the path that we are on right now. And for that matter, Iran can continue to strike boats that they don't like for forever, for as long as they're alive. But then on the other side, is that what the Iranian regime wants to do? Because generally speaking, before this war and the reason for the war was they were in a very peculiar situation and their economy has collapsed. So the only way for them to kind of regain some kind of economic growth is to start trade and to make sure that their boats gets out. And the other thing that I'm not going to say that that's going to happen, but if US starts to strike Iranian boats somewhere else in the world, not necessarily in the Strait, that's a fifth possibility. And is that something they want to do? Well, it hurts. And then it doesn't really hurt Iran that much to have high oil price. It hurts everybody else. But also Iran has friends. They have China. China doesn't want this high oil price. They have GCC countries, allegedly at least, as friends. Maybe not anymore, but they had them previously. They are not going to be happy. So, a Saudi Arabia military analyst said yesterday was that if Saudi feels like doing something, they're gonna enact their Pakistani bilateral agreement, and Pakistan has nuclear weapons. So, it's not a straightforward thing, but plain and simple, what matters is Trump has said there is allegedly peace talks, and allegedly there's going to be within 5 days peace. And previously they've said it's going to take three to 4 weeks, and it's currently taking 3 to 4 weeks, and that's what I'm based upon. And then, second of all, I'm not gonna put my life insurance on this market, and have a bit of common sense. This isn't, and I'm just glad my euro-dollar trade survived. At the end of the day, we didn't hit stop loss. We may have a new higher high. Great, I can actually put a lot size on here. Or pound, we don't have a lower low. We may have a higher high. Great, fantastic. I love it. That's the bottom line here. Sham says you are from Pakistan. I said Saudi could draw them in if they want to, because they have an agreement that they're going to help out. Is that the will of the Pakistani people? Probably not. But that was the military analyst who said that. And he's probably a spokesperson. What do you call it? A pipeline spokesperson? No. Giving, because they don't say things, they're just out of their own things. They comes from the state. So I believe that is an official line. But again, as I was pointing out, if Iran continues to do whatever they're doing, despite US pulling out, it's not easy. And it's not going to be easy for them to just continuing with whatever they're doing with US pulling out. Okay? Then we hope, we pray that this is over, that we're not going to have more suffering, nobody else dies, and we can trade like normal. Great. Ahmad, Saudi has been severely attacked by Iran. They have every reason to hit back to Iran, because Iran has already broken, has already attacked them, so they could declare war on them if they wanted to. They haven't decided not to. So to say that Saudi would never, well, Iran gave them reasons to. They broke the Saudi sovereignty. So I don't know what else to say there. But they decided not to. Will they attack their own brothers? Maybe not. But why did then Iran attack their own brothers? Right? So at the end of the day, Strait of Hormuz at some point may or may not be open. At the moment, what drives the market is the hope that it's going to go up, that is going to open. That Iran also follows up with their words previously said that if US just stops attacking them, that they will open the strait. Now, is that actually going to come to fruition? I don't know. But what the markets do know is that there is a hope for it. And that's more than good enough for me. So, Australian dollar, US dollar. As I previously talked with Nick about the inflation story, that is all great. That is all news. But it's not necessarily a very direct, easy peasy lemon squeezy trade opportunity. We have struggled to go above 71.50, slightly going into 72. We currently got around 0.70. It seems to be some kind of fair value that the market has decided that Aussie is going to be under. So the only way for this to go higher is for dollar to fall. And price for dollar to fall could be down to 96, 95.5. Going all the way back down to way below the 97.60 where we started, and a bit more once this is over. That's how we reprice our trade. A risk event is that we go back to where we started from and a bit more. And in as much as I've heard people say earlier that oil is a buy opportunity, it's setting up for a buy opportunity. If this is going where this is going, it is not, to me, a straightforward. It was very straightforward for me to say earlier, before today, would be to hold a long oil trade, because of the constraints that we have had. What happened back in 2020 was that we had economies collapsing, people were losing their jobs, we were closing down economies, all fair and share. Oil fell and fell and fell. It continued to fall even after the involvement of the central banks, but it turned higher again after the fact. So I am in the long-term space thinking this should fall, and a bit of short-term. But of course, it has to be only being met with the Strait of Hormuz being opened. If that is not opened, then this can rebound and continue on. But that is then, to me, a gamble. And that is not necessarily driven by fundamentals. That's not driven by seasonality or technicals or anything that I normally trade upon and trade upon best. Could we go above 118? Yes, we can, as anything else in this world. So what is the most likely scenario going forward? It is, for me, for this one to continue lower. And I haven't put money on it. So it's not like I am losing money if this one continues higher. But it is the most likely scenario for me in the current situation. And then if new information comes in, then that might change, but then it's all hypothetical. But what I am happy about is an Australian dollar, Canadian dollar. I think that would be kind of the icing on the cake for this scenario, where a stronger Aussie coming in with inflation and a Canadian dollar where oil falls. And I think, okay, where in the commodities world, who has the most opposite? I've always tell you, where's the opposite trade? The strongest against the weakest. Those are the ones that move the most. And I figured out that Australian dollar CAD could be a such situation. Now, we have quite literally straight up, we almost had a new low, and we are coming out of a range bound ish market. So for me, I really want to see some kind of pullback, or something that would say, okay, we are coming down to either 95, 80 or something, like something that would be there, or number two would be even better, and play that opposite game. But this is far out of my normal. This isn't where I'm normally trading. This isn't what I normally look at. So it might be a loss, because you never know what you never know what generally happens on Australian dollar against the Canadian dollar, because they're not the primary movers. They're just the leftovers from Aussie against US dollar and Canadian against the US dollar. And that kind of leads me to just, okay, what markets do I not want in this situation? And this is basically it. Range on dollar CAD makes my skin crawl. Hi, Evan. We spoke about Aussie CAD this morning, 95 long. Gosh, that spike was too fast. Yeah, I know. So I'm just looking for something that is a bit more positive, not so much volatility, so that it doesn't kick me out before it goes higher. But yeah, somebody said that they were short euro dollar, and I say I respect it. Great job, fantastic. Stick to it. Don't let me or anybody else tell you differently, because I haven't looked at your strategy. I haven't looked at what you generally do and what generally leads to your profitability. You are at resistance, but what my job as a trader is to find buy opportunities, or sorry, support as a buyer and resistance as a seller. And I've identified that this level was good enough, probably higher, was good enough for a buy, and then it's just going to be left by the market to decide if we're going to get profits or not. And at the end of the day, that's how I love and how we roll around. At the end of the day, none of us lose, both wins. And as much as Nick sold New Zealand dollar and people are still thinking, oh, New Zealand dollar should fall, and we are in a double bottom, and New Zealand may coming into more inflation because of the situation, and China is still being online, and this should have a bit of a bullish turn with dollar falling, and this being a dollar bearish situation, and we have a range, and I'm waiting for this one to turn around higher. That would also be, I would say, a great turnaround. Does that mean that New Zealand CAD could be a buy? Yeah. Okay, maybe that's a better one than Aussie. The problem here is that New Zealand hasn't previously to this situation had a ton of inflation, but a little bit of an alternative there. New Zealand is still short, as Iran won't stop attacking. Now, as I said earlier, that's the basis. If they stop attacking, then sure. If there's a ceasefire, then sure. And if not, it's going to be all the way down here. Second of all, can I buy high in a range? Absolutely not. That is not at all situation that I normally trade. And if you look at my euro dollar trade, you see I trade the higher high. I didn't take the pullback. That's number 1 trade. And then new higher high, higher low. That is a number 2 trade. I will wait for number 2 trade. Does New Zealand dollar look like that right now? No. So I have to wait for new higher high. That means that the situation is over. And if not, it's just going to fall down and I'm not going to get an entry. A new higher high, pullback. And then I can continue. Though it comes down to, again, range-bound markets and breakouts. It's not great. I don't do well in that situation. So we'll see. We'll see where I can get my stop loss at. I don't think I need to put all the way down here, but it would be great if it continues, makes a bit of some kind of low, something like this, that I can use some kind of low to use that as my support level and stop loss below, so I don't need to have all the way down there. Then I might not take it at all. But then again, that's the part of negotiations. That's a part of what situation do you want to be in. I don't want to be in a situation where I'm most likely to lose money, and there is that. Very volatile market today. Yep. Use volatility to your advantage. Use the volatility to does your strategy work? So does your strategy fit? And if it doesn't fit, then you can take your hands, put them on the table, and don't do anything. As ECB is talking hike narrative while New Zealand's still getting weaker on the basket. Yeah, so it's a bit against my theory then for New Zealand. But then again, and in terms of that they will have inflation because of the situation. But then again, if a trade works out for you, if you think that inflation or data is going to come in within a certain direction, or growth is going to come in for a certain direction, then data will eventually back you up probably. And if you don't, and if you miss, which I have, if when the economists have disagreed with you, then you just can hit your stop loss and you move on to the next one, and then you learn from it. But yeah, thank you very much, Luggy. No, right, Beast. And a part of what I'm saying is, yes, it is not priced in. And there's a difference between Aussie and New Zealand. And why I went to New Zealand instead of Australia would be that New Zealand is in a better position to price that in with the situation that has led to. But again, it's all a bit hypothetical. I haven't double checked my data about inflation in New Zealand. And that might be the reason why I get out of it. I don't take it at all, because at the end of the day, once this thing is over, I'm going to go back to fundamentals. And fundamentals is one of the key filters that would filter out a trade. So if it doesn't fit in, then it doesn't. But I can look for it. I can look into it. I can be interested in it, as long as I keep doing my research on it. And then check balance, and then if it leads to, then you will see me put it in Discord. Who said you're a CAD? I was like, yeah, okay, yeah, yes, I did Aussie CAD theory. Interested in that. EuroCAD. Okay, that's a much better situation. Okay, that's a much better technical. Okay. Could have, would have, should have. That would be a great buy. Thank you very much for that one. I'll put it up for tomorrow's discussion in my head, because I should have been in there technically then. Okay. And yeah, okay. They fell 500 pips. Okay. There might be something in here. More than Aussie CAD. But yeah, thank you. Everything is speculative at the moment. The question is Trump going to stay true to his word, or is Iran going to fight back and say, no, we don't want any peace? That's a part of the package. And yeah, true. As Australian dollar US dollar has been ranging for months, that's absolutely true. And that's why I'm not sitting here saying, I should buy it. But okay. I just want to say before I mentioned it is I still believe that there is risk for intervention from back Japan if we come back up to 159, 60, 70, 80, 90, 160. If we see a brand new lower low below 157, I think that we are going to see, if we come back up again after that, then we're going to see maybe a bit of a higher price again before having the intervention talks again. We had quite strong interference over here. So if markets then decides to go a bit higher, sorry, if Bank Japan allows the market to go a bit higher after the new reset, then look out for that. But we still have, if price comes back up to 160 short, or sly of 160, we still have Bank of Japan coming in with their intervention speak. We still have Swiss. Switzerland is also not happy with the Forex movements, and that could also abruptly and kind of without anything in advance say, hey, we don't like Swiss strong, we make it weaker. So that could also be the case. So whatever drives dollar yen lower could be a combination of both. Japan also wanted a weak dollar, and the 101 on intervention is to intervene whenever you have low liquidity and the market trends is with you. So that is me. Euro dollar higher, pound dollar higher, waiting for New Zealand dollar, waiting for Aussie dollar, waiting for Aussie CAD, maybe also Euro CAD for tomorrow, and then some Euro yen. I don't know. I'll have to double check with that intervention thing if I'm going to be interested in that, but something in that direction. But yeah, we are at least at the beginning of something, so we may have some legs to go. And until then, hopefully you jump over to my YouTube channel as well, and join the lives that we're going to have this week as well. And if you need help in your trading, I am definitely a man to contact. Have an hour with me, and we can go through your trades. And the reason why I'm here is to make you a better trader. So until then, boom, be safe.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone is doing fantastic this morning. Markets are really moving early on in the morning. We had a gap, I would say a natural drift higher there. In oil and the dollar, all that good stuff. And then that was just completely wiped away in a moment's notice, probably because of Donald Trump and his words. So very, very interesting. I would like to get an understanding, a general consensus from everyone here watching the stream. I know some of you guys are probably listening in the background or at work or something like that, but I want to know, because there seems to be two narratives. One side is saying that there is talks with Iran going on. There's a resolution coming within 5 days. And then the other side is saying those talks are not happening at all. So I'm curious to know from you guys, what are you guys thinking? Hit type 1 in the chat if you think there's going to be an escalation, or type 2 in the chat if you think that the war will end within the week's end. I'm just curious to know where you guys are at. Me personally, I don't know. I'm kind of leaning towards maybe it doesn't end in the 5 days. I think the president was just buying a little bit of time there. I would have liked to see some clear, you know, the people talking on the same side, like, yeah, there was some talks, but it's a little bit conflicting when you say one side is there's having meaningful conversations, and then the other counterparty says absolutely not. What are you talking about? So let's see. It's like you said, three. Um, okay, so there's some ones, some twos. Cheryl's, it won't end in 5 days. Yeah, I'm kind of thinking that as well. Cheryl's, Rabies is saying one. Okay, yeah, thank you guys. Thank you guys for the interaction there. Yeah, I don't know. So obviously, when it comes to directional bias, it's going to be driven by the price of oil, with the price of yields, or the price of bonds, things like that. There, it's a little bit confusing. I think you have to stick with whatever bias you're with, right? But also hold on to that bias very loosely, because things can obviously change. And also too, just approach the markets from a safe way. Just because you see, like, for example, gold, right, was on a clear trajectory to the downside here, tapped that 200-day moving average, and then as of now here just moved 8% in the opposite direction. Oil too. So very, very challenging market to navigate, especially if you are oversizing, because the trade can flip on you in a moment's notice. um, uh, okay, so SBK has a question. Alan, I have a how will Aussie New Zealand play considering those two scenarios? Aussie New Zealand, so I think Aussie is the stronger currency out of the two. So I would expect a natural drift higher there. Um, I am looking for pullbacks though. So Aussie New Zealand, when I went long the Aussie basket, I went long Aussie US dollar, Aussie CAD, and Aussie Swiss. Aussie New Zealand was one that I really wanted to participate in, but however, the price action just kept going without me there, and I actually got no opportunity for pullback. So that's why I didn't enter it originally when I went long the Aussie basket. You are starting to see a pullback now. So maybe if I position myself long Aussie basket again, if it makes sense, then if Aussie New Zealand is still towards pulling back a little bit, then maybe I can add that one into the basket. But during that time when I entered, it was just price was moving and I didn't want to chase that price. And I'm glad I did, because now you're seeing 3 consecutive candles, 4 actually consecutive red candles there. So let's see if we can get a deeper pullback. As far as possible scenarios, I think that the Aussie will continue to be the higher yielding currency against the Kiwi dollar. Aussie has some pre-existing elevated inflation. The RBA had some pre-existing motive to go ahead and hike rates. This added, potential oil spike, elevated inflation could only add to that. And I think the Kiwi is struggling more than the Aussie. So as far as a either or scenario, I think whether there's escalation or de-escalation, I think Aussie Kiwi is to the upside. So I'm just waiting for some possible pullbacks. I'm seeing here in the comment section, and Kiwi dollar still bearish. I think so. A lot of the price action at the moment is just driven by US dollar, right? Now, if the escalation or the war in the Middle East goes away, I think you will see some dollar weakness there. I mean, you're seeing that right now. So I do think that there's some dollar weakness there, but I think ultimately it is just, the Kiwi dollar is weaker. So whether it be a straight shot to the downside in the Kiwi dollar, or you experience a pullback where you can get some better prices, that's a possibility too. Maybe dollar index trades into that 200-day moving average and then it drifts higher. I don't know, but I think that the Kiwi dollar to the downside is the path of least resistance, especially if you look at the Forex scorecard here. This is the thing I was going to talk about, because I am short euro dollar and I am short Kiwi dollar. And the reason for that, right? Obviously, you do have this dollar safe haven attractiveness going on, but you do have the fundamentals behind those still showing, to the downside. So that's why I want to hold on to the trades. Again, you have to approach this market with a little bit more caution. So whether that be widening your stop loss or lowering your size to absorb these whipsaws, that's the way I would approach it. But look at this Forex scorecard here for Kiwi dollar. You can see that it's getting a very bearish reading, -11. The score over time has just gotten progressively worse. You have growth, in favor for the US dollar. You have the job market in favor for the US dollar. Things like that. So this, sentiment bears, technicals bears. So I still think it's wise to, for myself, I'm going to personally hold on to those trades. I'm long Aussie Kiwi pullback. I ran the trade for 10-year backtest, though my Python has a positive expected value. That's good, man. If as long as your system that you have back tested, that you have put the time in, gives you that confidence, then go for it. G Drum said, observing their current interactions characterized by discussions and agreements, I anticipate a potential return to conflict within 1 to 2 years. That is a very interesting take there. Alan, what are your thoughts on silver? I think silver, you had this insane run up in silver, followed by a very quick, move to the downside there. We did a post on the A1 Instagram. It was a research type post, and it said, when silver falls 20% or more from the highs, the forward looking returns from that look very lackluster. They're almost non-existent to some extent there. And if we just look at silver, let's go ahead and look at the silver chart here, and we'll go to the 12-month time frame here. You can see that you had these monster run-ups here. This was in 1978. You had a spike, and then you had a complete decline. Look at that move. And then the forward looking returns after that, you can see that they were almost non-existent there. Happened again in the 2010, 2011 monster run up. 2010, 2011 came, big move to the downside, and the results were lackluster. And now you're seeing the same move, right? You're seeing this humongous run up here in silver. You remember it finished 2025 at 140% gain, if I'm not mistaken. Continued running up, and now you have this level here, and I think that there is a possibility that this thing has history doesn't repeat itself exactly, but it rhymes a lot. So I do think that the forward looking returns are going to be not that attractive, not the best there. So in my personal opinion, this is just a take that I have. I think the silver to the downside is very, very probable, especially if you start breaching these importing moving averages here. Like, so we were testing this 200-day moving average here in yellow. This is what I think could happen, right? This morning, you had a hint of positivity with a potential resolution, right? Silver and gold, both of them lost $2 trillion, right? In market cap. If you continue to see another wave of escalation, maybe Trump says, you know what, we're not doing it, or maybe he, commits to that 48-hour deadline that he mentioned, and yields start to spike higher, and you start to see gold and silver, trade lower again. That could be the catalyst that ultimately makes those two metals not attractive at all, and you can see a continued downside. So that's kind of my thoughts there on the metal story. Okay. I know war is the worst thing that can happen, but as a trader, I need escalation. Rabies, I assume you're either long US dollar or you're long oil. Can you show the Edgefinder Australian data? Of course. In fact, what I'll do for you, Econ Maxing, is I'll show you basically the whole rundown as to why I think I'm looking to buy the dip on Aussie dollar if you start to see a real de-escalation. So let's go ahead and go to the Australian US dollar. And by the way, this is the edge finder that I use. So if you guys don't use it, I highly recommend that you go ahead and get yourself a copy and join the Telegram channel as well, because we did have a giveaway and someone actually did find themselves, or they did get themselves, a copy of the edge finder for free. But we also have other promos and stuff like that you can definitely take advantage of. And I think, if I'm not mistaken, there's going to be another promotion for the Edge Finder this week. So definitely join that Telegram channel for more updates on that. I think you guys will be very, very pleased. It's especially important, though, that you use some kind of terminal, some kind of systemized approach to trading, especially in a time like this. So let's go ahead and go to the Aussie US dollar here scorecard. Right here, it is getting a neutral reading. So not the best, not the worst, right? And Aussie dollar was getting a bullish reading for some time. Now the technicals right now are bearish, but let's go ahead and look at the economic heat map for the Australian dollar. At the moment, they have had some pretty good growth, right? They had, you can see here the AU impact bullish. PMIs came in somewhat okay, but you have services PMIs, CPI, which is bullish for the Australian dollar. It's coming in hot. It's coming in hotter than expected. So I mentioned earlier that before all of this was happening, the Aussie economy was experiencing some elevated inflation. And the way that a central bank goes ahead and attack that problem is by hiking interest rates. Then you add the prospect of a potential, inflation coming from the price of oil being elevated. That will definitely go ahead and, definitely give them a reason to hike rates faster or a lot bigger. So the impact for the Australian dollar is pretty strong here. So this is the economic heat map. Now, if we compare the Aussie dollar against the other basket of major currencies, you can see here that the US dollar is one of the stronger ones here. Let me go ahead and refresh my page real quick. You can also see that the Australian dollar is quite strong as well, the second strongest, right? So I like to see that relative strength against the other peers. And then, right, if you just go from let's go to the COT report, and you're basically looking at here, what people are doing, institutions, the big money. Let's go to the COT data history. In fact, we'll go ahead and filter Aussie dollar. Look at that. So this yellow line is essentially, a trend. And you can see here that the Aussie dollar was a little bit weak, but now you see towards beginning from the beginning of this year, actually, you can see that there has been a drift higher in the Australian dollar. That means institutions are buying that asset there. And so if you see, institutions buying it, you see elevated inflation and the chance of rates, going higher for the Australian dollar, I think that'll be an attractive currency for investors. How you doing, Marco?
Yo, hello. How are you?
Good, man. Very interesting morning we got going on.
Absolutely. Pretty crazy Monday. Lots of movement. Trump announcing possible sort of trade talks. Iran completely denying the talks of the ceasefire. Personally, I think Trump is lying. I think he's at least exaggerating, but possibly even kind of lying about the whole thing. So I'm positioned pretty much the same. I'm keeping with my thesis. Risk off, position still open. And yeah, what about you?
I'm positioned the same way as well. I didn't change anything. I'm still short the euro, still short the Kiwi dollar. The fundamentals behind them, the edge finder is still pointing those things to the downside. Euro economy still has weak growth. And then if they do go ahead and this thing de-escalates, markets were pricing in, I think it was 2 to 3 rate hikes for the ECB. So if it does de-escalate, they have to reprice those rate hikes off the table now, right? Especially if this is a short-lived conflict and the inflation is very fast pass through. I think that will hurt the euro economy even more, or the euro dollar price action even more. Same thing with the Kiwi dollar. So the fundamentals are still supportive, and that's what I like about trading with like the edge finder is that you have the overall sentiment and the headlines supporting the dollar, but then you also have the fundamentals underlying behind that still pointing at some weakness in the euro and the Kiwi. So it's unfortunate that we're seeing a lot of volatility, a lot of whipsaw action. So like right now, the trades were in profit and then it's not in profit, right? So you're just kind of experiencing this. That's why I say you got to have wide stop loss, right? Wide stop loss to absorb the hit or whatever. And we'll see. And look, if we're completely wrong, then we're wrong. But I think that's the key to navigating a market like this is just like, anticipate and be open to your P&L going from positive to neutral to negative to whatever. But from my personal opinion, Marco, I think the same way. I think that, early in the morning, I was watching this. I woke up really early today. The 2-year yield was trading at 4%. It was up like 3% on the day or something like that. And we all know what happened last time with the tariff stuff that happened where the bond market scared the president, right? And that basically had him taco a little bit. And I think that's what we got today. So we'll see. Hopefully from a human being standpoint, I do want the war to be over with. But it's conflicting and it's hard to believe when you have one side saying there was positive talks and then the counterparty says, what are you talking about?
Yeah, that's kind of weird. I mean, hopefully the thing gets resolved, absolutely. But it's Trump. And Trump is the headline, the news guy. He's the sort of number one manipulator of the press. So with Iran saying that they're not really talking, it's not a good sign. I mean, the markets are definitely reacting. There's a huge reaction. Oil, a 10% move lower. So yeah, it's pretty strange. I just wanted to mention before we continue, if you guys want to participate in the DNA funded giveaway, I will post the link to the form. Okay, I'll post the link to the form. Fill it out and you will get entered into a giveaway. It is a 10K one phase account. So as far as my current positions that I'm running, I have Euro Swiss, which is in profit, which is actually working out nicely. I have a buy position on US oil. I have a sell on USD JPY, which is also working out okay. And I have a sell on Euro dollar approaching the stop loss. Now, my question for you, Alan, is so let's see, when has the war started? The 2nd of March. Do you think if there is sort of an end of the conflict and the markets have to reprice all of the hikes that they priced in, is it enough to counter the dollar weakness, in your opinion?
Oh,
Or
definitely.
you think so?
Yeah, I think so you
Okay,
you pointed
cool.
that out, and I was trying to explain this, but I think you articulated it a lot better. So like for example, the Kiwi dollar, I think it's bearish. The fundamentals behind it are bearish, but that doesn't mean that it's going to be a straight path downward. So if you were to get a resolution of some sort, to your point, yes, I do think that the markets will reprice that into the price action there, and so you'll probably get a dip in the dollar. Now that doesn't mean the dollar just falls off a cliff, because there's some fundamental drivers there. It's pretty resilient, especially relative to other countries or whatever. So I do think that you get this was at March 2nd candle. So maybe you just trade into this 98 handle right here, that 200-day moving average that you see, the 200-day and the 50-day. You trade back into there, and then you just have a chance to short whether it be the euro or the Kiwi or whatever with some better prices. So I do think that that's very likely there. So in that case, I would get stopped out and then just wait for a re-entry and make sure for the stars to be aligned and things like that. Make sure nothing changes, and then then trade that continuation move.
Yeah, and if I heard you correctly, you're looking to possibly buy AU if we get a complete kind of resolution.
Yeah, because the AU is kind of like in a lose-lose situation as far as rate hikes go. That was like a pre-existing motive from the RBA. They were looking to do it no matter what, and so that's kind of my idea there.
Interesting. I mean, the way that I'm positioned at the moment is actually through interventions. So if I just put up my screen, let me just click remove, click add. Okay. So essentially, in my opinion, I've done this without even knowing that I did it. I just realized it sort of this weekend. With these four positions, essentially, I should profit in both cases. Essentially, if there is a de-escalation, my Euro Swiss should go up and my USD JPY trade should go down. But if there is an escalation, oil should go up, Euro dollar should go down, but there's a floor on Euro Swiss. So there's a floor at 0.9 and there's a ceiling on USD JPY at 160. Does that make sense? Essentially, the central banks will defend those levels. So even though Euro Swiss will drop if there's an escalation, because the Swiss is a safe haven, the price should get defended by the SMB. And USD JPY, same thing. If there's an escalation, dollar catches a bid, but the BOJ should not let the price go much further than 160 or 161, let's say. So for me, I really like the way I've positioned it currently, and I didn't even realize this, but essentially, there's a very, very high chance I can lose money. Of course, I can lose money, but the chance is very low, let's say, and it would require both central banks to do nothing. So it would require an escalation, a de-escalation. Wait, I get confused a bit. No, sorry, an escalation, and that the SMB and the BOJ completely sit out their the defense of the levels. So yeah, I just wanted to comment on that. I thought that was pretty interesting. Using interventions and price levels as ceilings or floors is actually pretty powerful as a hedge for your current positions, which is something I'm guessing the pros have been doing for years now, and I've just realized it right now. So, yeah.
No, that's a great positioning, and I don't know if you saw this, but I think Japan was having intervention chatter this morning.
Oh, really? I missed it.
I saw it, and I thought of you, but it was intervention in oil futures, but.
Okay.
I did see something from the Bank of Japan saying that they were definitely monitoring the situation. I'm not gonna waste time finding it, but it
Awesome.
definitely happened.
I'll find it
Um,
later. No worries.
yeah. So there's definitely that chance there as well. And so yeah, you're pretty much hedged in either direction, and the chance it will take a very unique situation for you to get both of those stop losses hit.
Yeah, I think so. I think so too. I mean, the central banks really seem pretty happy to go ahead and defend those levels. But again, there's always a risk. Like nothing in the markets is risk free, so there's no free lunch. But what do you think about gold? So gold has been dropping, but today it's rising. So today it's positive, but it has been on a massive sell-off. We have just hit the 41 level, which I know you were looking at. Have you flipped maybe to be a bit bullish, or is your stance still kind of neutral to maybe even bearish?
I think it's too soon. The thing with like markets like this, when you're catching a falling knife, I would always rather buy something when you know that the structure has really shifted. So like this first happened, the 200-day moving average. Yes, maybe if you just buy it right there, you do have a better, you will capture probably more pips, right? If it does continue to the upside. However, you still have the risk that, it's freshly tapped and there's still a chance that this thing can roll over. Similarly to something like the S&P 500, you tapped it right here and you probably felt like a winner buying it immediately on that 200-day moving average, and it was going to continue higher. And then you fast forward a couple days later, and now you see yourself, still under that 200-day moving average at this 4-hour time frame here. So I would rather wait for a very obvious V-shaped recovery rather than try to catch the bottom there. I think it's really risky. Yes, you leave some pips on the table, but I think I would rather, be buying into some safer structure than this right here. This thing can still turn over, especially if you have there's still real risk, right? Iran didn't say this morning, yeah, we had talks. It was just one side. So if you see a strike happening, like I saw this morning that Israel was striking Tehran or something like that, right? If you see some of that, then market's going to say there was no talks. Like this is not signs of de-escalation, and then you would just get another repricing of that. And I think then whoever bought right here will either get stopped out at break even, or they will have to force a liquidation, because I think the move lower will be a lot more violent, especially if you get that and markets are like, well, I can't trust what this guy's saying as far as de-escalation. It's like the boy who cried wolf a little bit.
Yep, absolutely. From my research reading, I think we go a bit lower, actually. I think on gold we could go and revisit, let's say, 3,800. So that would be around these lows from October 25. Yes, we have that 200 EMA. Let me just paint that. But we have just retested it, which doesn't mean that we won't go through it. We have bounced off, obviously, but I think especially if there's actually no de-escalation, gold can keep on selling off. But it starts becoming more and more attractive on the sort of the 3,900 level, 3,800 level. One thing also I noticed on the weekly chart, supposedly gold is still overbought. So we had such a massive uptrend in 25 that gold is still considered overbought on the weekly chart, either through RSI or some sort of a measure. So if you had to pick one stock indice to buy once the conflict is actually over, like once both sides actually confirm that the escalations are done and that there's a ceasefire, what would it be? S&P, NAS, DAX, Nikkei? So if you had to pick one.
Good question. I wouldn't do tech, so I wouldn't do the Nasdaq.
Okay.
S&P has been relatively strong. It's been benefiting from the rotation that we've been seeing. If I want to catch a safe move to the upside, it would be the S&P. If I'm trying to catch the best lucrative move, it would probably be something like the Dow. I think the Dow would benefit from lower rates, those smaller companies, mid to lower cap companies and stuff like that. So that would be the faster move, the bigger move to the upside. But if I want to catch a safe play to the upside, it would probably be the broader S&P.
Cool. Yeah.
Someone in the comments, Nikkei is better too. I agree. If I'm going,
Yeah, that my
foreign,
pick would be the
yeah,
Nikkei.
yeah. If I'm going foreign, it will be Nikkei.
But the S&P is nice as well. I think the S&P is a good play. My pick would be the Nikkei, even over the S&P, because Nikkei has just had some complete outperformance of the S&P in the past year and a half, let's say. I was already in a buy position before this conflict happened, and I want to get back in. So if we get any sort of a clear resolution from both sides, not just from Trump being afraid of the markets and trying to fake his way to previous levels, but if we get actual talk from Iran, I think I'm going to jump into the Nikkei and buy this. If I look at the 20 EMA, let me take a look. Yeah, if we cross the 20 EMA, if we get an actual talk of a ceasefire and some confirmation with that, Nikkei is my play. I think we can quickly revisit those all-time highs. You have the new prime minister; she's super dovish. You have the new government, super dovish, major win, less taxes in Japan, capital coming back, higher interest rates. Did you see that? Yes, last week from the BOJ, possible higher interest rates in 2026, which destroys the carry trade on USD JPY, which brings back capital into Japan, thus putting possibly some capital into the Nikkei as well. So I think actually rate hikes could be long-term bullish for the Japanese stock market.
Yeah, and like rate hikes or higher rates don't always mean a bad thing too. It's not that vanilla. I mean, we've seen that with gold, right? Like safe haven status with gold, it's not that black and white where escalation gold, right? Yeah, like those rate hikes, even if they're gradual too, and they're anticipated and they're not hurtful or not like super out of the blue, that can definitely benefit the Nikkei. For sure, man. I think that's definitely a very strong play to the upside if you do get that specific scenario. But Marco, I'll go ahead and leave you to do the DNA funded here challenge. We have plenty of opportunities to talk this week though, so I'm very curious to see how this day ends. I don't know what's gonna happen, but this is just part of the game, I guess. And for those that want to stay up to date or maybe don't have the tools or anything like that, join the Telegram channel, because if something does happen monumental today in the markets, I will definitely go ahead and update you guys in real time. During this whole thing. So I'll be at my desk for the whole week, and so I'll definitely keep you guys up to date. And Marco, I will see you tomorrow. We'll have another talk.
See you tomorrow. This was a great session. I'm looking forward to the next one, and this week is going to be packed. We have a lot of things to talk about. So yeah, see you tomorrow.
All right, man. Take it easy. Bye-bye.
Goodbye. Let me post the link to the giveaway form one more time. So if you want to participate in the DNA funded giveaway, let's just bring it up here. You have the form. So in the comment section, you will find the link to the form, fill it out, and you will get entered into a giveaway. It's a 10K one-phase account, so a pretty good size of an account. If you want to get funded or take a challenge, we also have a discount code for you. So if you go to DNA and you type in A1 Live, that gets you 25% off any DNA funded challenge. So A1 Live, 25% off. This is a specific discount code for you guys watching the streams. This is my personal 25K two-phase account. This is the second phase. I'm back in profit. So I passed the phase one. See? Target hit. Now it's on to phase two. I'm pretty much half of the way there. So the profit target is 1,250. Current profit is 668. I need to make 5%. I've had a really good experience so far. DNA is a great company. There's a big broker behind them. The team is great. Here at A1, we've been working closely with the DNA funded team. So yeah, check it out and make sure you use the discount code A1 Live for 25% off. By the way, I'm trading this challenge purely using ChatGPT, and it's been going pretty well so far. So I've had a 50K account, passed phase one, passed phase two, got into some drawdown and blew the funded stage. but then passed the phase 1 of a 25K, and now trying to pass the phase 2. Main goal, of course, get a payout, get back all of the challenge fees, make some profit on top of that. So far, I'm down, what is it, around 200 and something dollars for the 50K, and maybe 150, 200 for the 25K. So we shall see what happens with that. Will I get my money back? Will I get some extra profits? I think with time, I will. You know, you just need to give it time. So getting back into the watch list. If anyone has joined recently, I'm in Euro Swiss. I'm in a long position. By the way, all of these 4 positions were signals in the A1 trading Discord. So I'm in a long on Euro Swiss. I'm in a buy position on US oil. I'm in a sell on USD JPY. I'm in a sell on the euro dollar, which is pretty close to the stop loss. So we will see what will happen with that. I mean, my take on the whole position today, or on the developments today, if we just refresh. Let's see. If we go a bit lower, I mean, you can just go to Trump. Iran would like to make a deal. Come on, Mr. Trump. Trump and Iran, if they carry through, will end conflict. Yeah, okay. Just don't trust words. I mean, words are really cheap. Actions are what actually matters. Trump can say whatever he wants. Iran can say whatever they want. So Israel can say whatever they want. Words are cheap. Actions are what actually matters. Unfortunately, in the markets, or maybe fortunately, depending on who you ask, words can move the markets a lot. See, minus 8.4%. Actions can move them even more. But words, even words that don't have any weight behind them, can move the markets absolutely. So if you're getting crushed today, if you lost some positions, if you got taken out, being flat is not a bad option. Being flat is definitely not a bad option. Volatile times, tough times to trade. What I personally would recommend you, if you got taken out of a lot of positions, and you're looking to re-enter, or you're looking to flip the opposite way, my suggestion would be, which is not financial advice, my suggestion would be to remain flat until you get an actual confirmation that there is going to be a de-escalation. Again, words are cheap, actions are what matters. If you get actions from the US and Iran, not just the US, you need both Iran, because Iran is keeping the Strait of Hormuz closed. So if you get actions from both of them, you can turn risk on. That's my personal game plan. If I'm going to be fast enough, if I'm going to be awake, if it doesn't happen during the night, I'm going to be in the Nikkei. So Nikkei seems very interesting to me. I can even put it on the watch list just to have it on there. You know, if we get some concrete evidence, concrete news from both sides about a de-escalation, this thing will probably explode up for around maybe 4, 5, 6%. And then I'll buy. I'll buy stop loss. I'll have a pretty big stop loss, definitely pretty big stop loss. The bet here would be that this thing goes back to all-time highs, which I think is pretty likely to happen. Hey, Marco, are you from Croatia? Yes, I'm from Croatia. I'm in Zagreb, which is the capital. So, yeah, just hopefully Iran doesn't start sending rockets to Europe. I'm just kidding. They probably won't. S&P going up today. Gold. I mean, gold sold off massively. I know a lot of people are probably or have probably started to buy gold. Personally, I wouldn't do it. I think that, again, we had just some words from Trump. I don't think that has any weight to it. So I'm looking for some lower levels to buy gold. Let's check the edge finder. Let me see. Gold neutral, -4, even close to a bearish score. So yeah, not good, not great. What do we have? We have silver, which has recovered on the day. We have copper and we have platinum. We also have Bitcoin, which is pushing higher. Bitcoin is kind of remaining the champ of this whole thing. I mean, look at the start of the conflict, 2nd of March. holding up well. Bitcoin is a risk on asset for sure, or it used to be a risk on asset. Bitcoin is risky. You don't go and buy a lot of Bitcoin, or you didn't go and buy a lot of Bitcoin in the past unless the markets were doing well and unless you had a lot of confidence in the markets. There was a big correlation between the Nasdaq and Bitcoin. Nowadays, situation may be changing a little bit. There hasn't been a sell-off at all. We're actually higher than we were on Bitcoin when the conflict started. There could be many reasons for this. I would say the main reason could be a lot of money going into crypto in the Middle East because they want to transfer money out of the Middle East. And the best way, the most efficient way, the easiest way possibly to do it is through crypto. It takes just one USB, or you don't maybe even need a USB, but you can definitely hide it from the authorities if you know what you're doing. So yeah, Bitcoin may be catching a bit because of that. I want to do the giveaway now. So let me just grab all of your names. Let's see, today is the 23rd of March. Let's see how many entries we have today. We have quite a lot of entries. Whoa, I think this is the biggest amount of entries I have seen so far. It's up there. So I have the names, paste them in the wheel, spin, and let's see. Linwee Tamfu, congrats on being the winner. Hope I didn't butcher your name. After my segment, I'm going to send you an email with the free 10K one phase account. So it's basically a discount code. You just go to the checkout page on DNA Funded. Go to the checkout page on DNA and write in the code that I'm going to send you. So congrats on being the winner. Good luck on the account. If you want to get funded, I'll post another reminder. Code A1Live gets you 25% off any DNA funded challenge. Okay. And this is my personal 25K. This is not a gift from DNA. I paid with this one. Okay. I paid for this challenge, so it's real. It's not like a fake setup where an influencer partners with a prop firm. Prop firm gives him fake accounts. He gets fake payouts. This is like a real account. I already lost the previous one, so I know it's a real account. Okay. Anyway, let's see the comments because I still have 3 more minutes, and then I do believe we have a guest coming on after me. Let's check. Yeah, Tiger FX is coming on after me, so don't go anywhere because he will be with you in 3 minutes. So let's see, what do we have? Some comments. Intervention on oil. Yeah, so it looks like there was an intervention, but was an intervention on oil. This Japanese government considering an intervention in oil futures, but I also think there was some talk of an intervention on currencies. That's what Alan mentioned. So I do think that is present as well, which is good for me. I'm positioned for an intervention. So I have a sell on USD/JPY. BOJ has been pretty vocal about defending the 160 level. So essentially, I think this trade has really small risk. If there's an escalation, USD will gain value, but the BOJ will keep defending the 160 level. So we shouldn't cross that level. If there's a de-escalation, the dollar loses value. So this chart should go down. That's why I like being positioned short here. Euro Swiss, same thing. We have a price floor at 0.9, which should get defended by the SNB, the Swiss Central Bank or the Swiss National Bank. And if there's a de-escalation, this chart goes up. So in both cases, I should make some percentage or be break even at least. And this is positive swaps as well. Let's see, last thing for today, last thing. I have a hypothesis where Aussie strength reduces because it stood out as the only CB hiking, but now there is a potential more CB being hawkish. That could be a good case looking at the Aussie dollar. And we already started to sell off massively before this news. So if you look at what happened, so I mean, we started to heavily sell off after the open. This was the market open, and there was a pretty large sell-off. Now, of course, the recovery. Will the recovery last? We shall see. I don't think personally it will, because I think, unfortunately, there's not going to be a de-escalation anytime soon. Plus, the strait will remain closed. So that's a bearish position on the Aussie dollar, especially what Cycling Club is saying about Australia now being or hiking before the war, and now pretty much every central bank is looking to hike. So maybe some repricing happening right there. One thing that I'm going to say, last thing for today from me, ECB, European Central Bank, announced possible rate hikes. Okay, possible rate hikes. Anytime that the ECB, European Central Bank, announces or does rate hikes going into an oil crisis, it ends up with the euro dollar being lower. I made a small study on the topic. I posted the results in the A1 Discord. So if you want to read all of that, and if you want to get all of my trades, make sure you join, and you can use the code Marco to get 25% off. So link to join the A1 Discord is in the description. I'll see you in there. That's it from me. Don't go anywhere, because you have Tiger coming on after me. Good luck in the markets. I will see you tomorrow, and stay safe. See you.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Monday morning to you. Hope you're all doing well. Hope you relaxed, rested over the weekend, took a break from all this craziness, and just spaced out and just forget about everything for a while. It's a good idea to do that on the weekends, especially with the war and all the craziness we got going on. But anyway, yeah, quite the last couple of days, guys. Remember the other day, President Trump obviously had the 48-hour notice that he put on Iran as far as opening up Hormuz or the nuclear plants get destroyed. So, you know, and I was thinking this whole time, well, think back to the operations that the U.S. military has put on Iran thus far. And he gave a certain amount of time on both of those and started those campaigns well short of the end of that. So yeah, you know, that basically would have put us up until what, 7 something tonight, 7 p.m. as far as that 48 hours. But it sounds like that, you know, it sounds like there's some talks going on now. Obviously, you know, there's 2 sides to the story. President Trump obviously gave his Truth Social post, and Iran quickly fired back through some news outlets that I find maybe on the sketchy side, guys. I mean, we did hear the rebuttal from Fars News Agency, and I just did a little digging on them because I've never heard of them. But, you know, just wanted to see if they sounded like a credible operation or not. And what I found is, yes, they are a real and well-established Iranian news agency, founded in 2003. It is one of the major outlets, of course, in Iran. They do have English language in there as well as far as their news go. However, It is not considered a legitimate, independent, or highly credible news source by most Western international standards. So not just the U.S., but us. So think National Enquirer, those of you here in the U.S., and all the craziness that we get on there. So I'm just saying that I don't know how much trust I put into them. And I think the market has really spoken, because if we take a look at the equities open today, this was another thing I was looking to go over here to the indices real quick. I mean, clearly, if we just look at the equities open, clearly the market is on the side of what Trump is saying here. So, we've had a big, strong gap up on the S&P there. There's the Nasdaq, and then, of course, the Dow Jones and the Russell 2000. So from a reaction, it just looks like the market is favoring what Trump is saying. I mean, at the end of the day, Trump's got a legacy to think about. I don't personally think he would just come out and say, something to fix the markets or move the markets in his direction, because you can't hide from anything this day and age. As far as everybody's got a cell phone, smartphone, can record every little thing. So I don't know. I just think that, I just like to look at what the market is doing, and the market is clearly, from what I'm seeing, on the side of what he posted on Truth Social. So I say all that to say, just be careful out there. It's always best in times like this to just wait till the weak hands get shaken out, and kind of, find out what trends are developing. Hey, is the volatility calming down? Is the volume kind of calming back down relative to where it was at prior to those releases? So, yeah, I mean, who knows who's right in this case? But the market has clearly spoken as of right now, 10:51 a.m. Eastern Standard Time on a Monday. So, but yeah, we don't even have the indices, to my knowledge, in our list anyway, do we? Just taking a look at the Edge Finder over here. Yeah, they're still pretty well neutral. At the end of the day, the data matters on the hard facts. So it would be nice to get some more concrete reaction from whoever survived in Iran as far as their leadership, or their, whoever's currently in charge of the country. So I don't know. I don't know. I don't know how much trust I put into that news agency, but that's just my thoughts on that. And what else did I put down over here? And then another note that I saw was, a couple of things I thought I would bring up. Number one, we did have a news piece come out earlier on Japan. If I can go find that quick red alert that I saw a little bit ago. But basically, they're thinking about intervening with the futures market, the oil's future. Where did I see that? Yeah, right here. Japanese government considering intervention in oil markets. Okay, well, that sounds pretty good for the Nikkei. And I think another thing that sounds good for the Nikkei, even though it's not on our Edge Finder just yet, as far as a buy or a sell, it's still neutral. I think it's a +3. We'll take a further look at it in a minute, but look at what the big banks and institutions did for Friday's updated COT report, guys. They came out 29.5% of a net bullish change, a net positive change. So they did add 4,200 basically long contracts, got rid of 3,700. Those numbers each individually are very bullish. So you stack them together, and my gosh, that's a 30% increase in their net change long. So you don't think they know what's going on with this intervention threats, or whether you want to call it threats or promise or whatever you want to call it. But yeah, that definitely looks like a really good sign for Nikkei. But the challenge is it's currently, even though it has really good sentiment scoring and it has really good economic or fundamental analysis scoring, we're just lacking on the technicals. That's really it. I mean, if we go take a look a little closer at Nikkei, and by the way, guys, let me know if you have any assets you'd like me to pop on. I see you, pound dollar, Abu Zadaya. Hope I said that right. Yeah, we'll take a look at that in a minute because I'm keeping an eye on that one as well. But as far as the Nikkei goes, let me just go back and find it real quick. Yeah, it's just kind of a bummer that we got such strong downtrends. We take a look at the daily over here. We got our 8 below our 21 EMA. And you guys hear me blabber every now and then about the master pattern, talking about contraction boxes. We've actually busted out of this orange contraction box right down to the swing low that we had from what day was that? That was Monday the 9th, so 2 weeks ago. And now we've obviously had a big push up. So I personally would like to get into a Nikkei trade, but I really need to see it start doing something as far as higher highs and lows, because literally all we've seen is lower lows and highs on a daily, over here on a 4 hour. But yeah, obviously ever since Trump came out with his tweet earlier this morning, or his True Social post, I should say, yeah, the market's really piling into the Nikkei. So, kudos to those people down here if this does in fact give us a push up between not only this the news about the 5-day delay of bombing their power plants, and then not to mention the intervention talks from Japan talking about the oil futures contracts. I just personally want to see some newer highs forming over here. That's just me, just to be a little on the safe side, but mainly so we can get this number over here on the Nikkei to give us a positive number again. I mean, strong -4. Yeah, or I should say weak -4. I don't know. That's just not as appealing to me. So yeah, let's start breaking some of these supply zones that got mitigated and just start doing something like this. If I could just kind of draw, something like this. If I could get something that looks a little bit more like that, maybe pull back to a newly created demand zone in here somewhere, then that's what I would personally be looking for. Because by the time it does that, get a moving average crossover, it'll probably give us a positive score on the technicals again. So that's that. You said you wanted to see the pound dollar. Let's go have a look at pound dollar. And by the way, pound dollar is still giving us a negative. Let me get my top setups back up over here. Where are we at? All right, it popped off the list, didn't it? I wonder why that is. Why did it pop off the list, ladies and gents? Well, let's go have a look at the heat map. What was the movement we had just the other day? Okay. It was the unemployment rate. So remember, the pound was our weaker currency there for a good while. But come the other day, what was that, Thursday? The unemployment rate, they actually had a pretty decent number. They dropped 0.1%. So that took us from a 20%, remember, because this one was in the basement. It doubled their score to 40%. Okay. So, it's no longer, it's still weak. Don't get me wrong. It's just not as weak. Not as weak as it was prior to the unemployment rate. So that's obviously why, looking at the bullish and bearish items, it's just currently not on there. Where is it? Is it like a -4, -3 or something? Let's go look here. Yeah, -2 actually. So it's just no longer as appealing. That unemployment rate kind of changed things up as far as shorting this thing. And not to mention the euro, the pound, the Aussie, the Kiwi. Those are a little more on the risk on side. And if Trump actually, in fact, did have that dialogue, even though Iran's, news sources denying it, then might think twice a little bit about selling some of these more risk on currencies, if that makes sense. So anyway, but just taking a look at the technicals on it, pound dollar, where you at? Pound dollar. Yeah, I've got a supply zone a little higher up here at the 135.25, it looks like. So we're not really too far away from it. Let me zoom in a little bit. Yeah, for a brief minute, when we still had that bearish score, I was actually keeping an eye on this zone here. But as you can see, price just chewed right through it upon the Trump tweet, or the Trump Truth Social post. So I didn't like it from the beginning, because we did bounce into this 4-hour daily demand zone confluence from back here at the start of December. Okay. We bounced into it, 10 days ago? And now we've started a new series on a 4-hour chart of highs and lows, guys. So as far as shorting this asset, even if I had a -5 or lower score, I would just be a little hesitant about it due to that there alone. So, I'd be interested, despite all that, to see what kind of reaction we get from this supply over here that was created back on February 26th. So just a couple days prior to the Iran campaign, the conflict. But at the end of the day, there really wasn't really wasn't enough volume spread analysis activity to get me too excited about it, about a possible, about this supply zone itself. We did have a drop But as you can see, it took a couple days before it broke a structure. And I don't really count this structure here as a structure. I'm more so interested in the major structures, not so much the minor ones like you see here. So, it just didn't have the strength coming out of it. So, but nevertheless, I still want to see what happens when it hits it. But the reality is, even if we bounce in and give a bearish engulfing candle or wick on top, VSA, spike to the downside, I don't know. I still would probably be a little sketched out by it. But just be careful on pound dollar. And before I do forget, guys, just keep in mind, Trader Nick does have his discounts. A1 Live, if you go to olaprime.com, if you are thinking about checking into another prop challenge firm, definitely do so. Go give them a look at least to see what their trading rules are. They are one of the more transparent firms in the industry. They've got, and trust me, I know this because I used to moderate their Discord channel, and I spent all day just helping people out with understanding the rules. So they're clearly marked. If you guys have any questions, and the big thing to remember, regardless of what prop firm you go for, is to make sure that it aligns with your trading style. Some firms are best for scalpers. Some are better for short-term swing traders. Some are better for longer-term swing traders. Okay, so just keep that in mind. But yeah, check them out, olaprime.com. They did start their competition this week, by the way, if anybody signed up for that. So anyway, yeah, as always, you guys can let me know if you have any thoughts or questions on that. But yeah, A1 Live is the code, or you've got a QR code there on the screen. So having said that, pound dollar down. Okay. ASIN is short Kiwi dollar, Euro dollar, and long Aussie Swiss and Aussie Kiwi. So when you went long and short those assets, did you just put normal regular positions on both of those, on all four of those, or did you break it up into did you do a half a position on the Kiwi dollar, a half on Euro dollar, or did you just put two full positions? I just say be careful in case you did do full positions, because at the end of the day, we don't necessarily want to double our risk on any one currency, okay, no matter what you pair it with. So just be careful with that. I know I don't like to do it, because if you lose once, you basically lose twice, right? So just be aware of that. But yeah, good luck to you on that. Let's have a quick look at them. Kiwi dollar, I know that one is definitely at the bottom of our list, if I remember right. I think I'm trying to lose my voice, ladies and gents. I seem to have this Monday voice where it takes my first stream to kind of clear everything up, and then I'm good for the rest of the week. I don't know if you guys have noticed that. Yeah, Kiwi dollar, Euro dollar, they're definitely giving us some very nice bearish scores. As far as supply zones I've drawn up, yeah, I've got a daily zone. Let me go back to a daily over here. So I'm keeping an eye on this red candle here, because we did have a nice gap out that continued breaking down, broke structures. Now, I did get a little bit of a bounce off the daily demand zone underneath. Here, let me get rid of my master pattern real quick. So yeah, we did have the daily 4-hour confluence. Now, it did just barely touch the daily. Oh, it did not touch the daily. So I take that back. Look at that. Got a little clearance, Clarence. What's your vector, Victor? Anybody can quote that movie? Let me know. We have Clarence. What's your vector, Victor? And what's the other piece he says? Roger. Yeah, okay. One of my favorite movies ever. But anyway, I digress. Going back to the 4-hour chart, yeah, we did kind of already bounce into this lower 4-hour zone here where we did get that bounce down. But we still have yet to touch the daily. So I imagine if we drop into maybe a 2 or a 1 hour, it might even find another confluence in here. But as far as a 4-hour chart, we do have a 200 EMA going through right here. So I personally like to wait till that zone gets punctured. Now, I usually do that on a 1-hour chart, but in this case, I just feel like the picture looks a little better from the daily 4-hour confluence portion of it. Because when I go into a 1 hour, it starts getting to be a lot of candles to the left there. But that picture looks really dang good on a 4-hour chart. So for me, if I were to go short the Kiwi dollar, which hopefully it just takes off on you and drops in your favor. But I know I would be waiting for it to, pop back up another, 20 pips or so. And it seems like it's on its way there. 59 even. Psychological level is basically where I have my alerts. So good luck to you. And if it goes against you 20 pips, I may jump right in there with you. Airplane Tat's finest. That's right. That's right, guys. One of the best movies ever. If you have not seen Airplane, guys, you've got to go watch it. And don't forget, there's an Airplane 2. You got Kareem Abdul-Jabbar in it. Striker. It's the best comedy ever. So anyway, I believe, and then you also had asked about, let's see here. Yeah, I personally am not in a trade right now. I did have a few alerts. I'll get to it in just a second. How much I got? I got 10 minutes. But you did ask about not only Kiwi dollar, but euro dollar, I do believe it was. Yeah, so we bounced into a zone over here. Now, I personally, if I had a choice between Kiwi dollar and euro dollar, I'm picking Kiwi dollar all day long, even though we are kind of bouncing into some zone structures. Now, keep in mind, we got higher highs and lows. So it's a little bit of a decently strong counter trend going against us. But the reason I like the Kiwi dollar better, if I go back to my surprise index, is because the Kiwi is the worst performing currency from a fundamental perspective. Meanwhile, the euro is a decently strong one. It's at 60% as far as the high economic red folder events on economic calendar that it's exceeding expectations on. So Theta, and you're short on euro Aussie. Okay, yeah, we'll take a look at that as well. But yeah, that's just the thing, guys. And this may just be a me thing. I mean, I know it's given us a bearish signal over here on the Edge Finder, but I personally just find it hard to short a currency that's, stronger than the rest, especially when it's 60 or higher. Now, the dollar is ultimately the stronger currency, so I can't hate the idea. I just personally would choose Kiwi dollar, if I had my choice. So, but yeah, just to put a button on it, we are experiencing a zone right now. A little bit of a 4-hour, 1 hour confluence, but the 4 hour has already been touched and mitigated, guys. So that takes the 4 hour picture away from me. But it does leave us with the 1 hour, which is that red rectangle I got drawn up. So that's currently where we're at. Now let's take a look at this zone because this matters. Okay, we had a consolidation, we had a drop, we got a gap. What else can I look at this? Now we did break some structures along the way. Okay, took a while, it took a few days to do that. But then we did bounce into that demand zone underneath that pushed us back up. So I just need to see really the same as the Nikkei that I just looked at. I just need to see, I prefer to see some opposite, lower lows, lower highs kind of form. Now, if that supply zone is what creates it, so be it. I'll look for a second chance. But it's hard for me to want to be shorting this when I've got nothing but higher highs and lows, ever since that Friday the 13th Jason Voorhees, bounce off of that demand zone. So, yeah, I need more information on that personally. Euro Aussie Theta. Yeah, let's have a look at that for you. And Euro Aussie. Yeah, so we're not given a very good bullish or bearish on it. Let's have a look from a technical. Where is my Euro Aussie? There it is. Hiding in plain sight. Okay, so daily is down. We got our 8 below our 21 EMA, so that is bearish. Pulling in, though, to some supply zones that you see here. Now, it did pierce through this one. It looks like I drew up another one up here, which I could tell already I'm not that interested in because and I would have to go to a smaller time frame. But this supply zone clearly didn't have that much strength because otherwise it would have continued down to break this structure rather quick. But instead, what happened? It took over a week to do so. So automatic. And again, guys, I drew this zone up probably when price was like right about, right in this area. I just haven't deleted it yet. In fact, I'm going to do that now because it's just not strong to me because it didn't even break a structure, in a decent amount of time. It took, like I said, took over a week. So I'm going to delete that. Going back to a 4 hour. Yeah, same thing. It's retraced nicely. It has, on a 4 hour chart, it has peaked pierced through the 200 EMA, but I don't see any good supply zones. And remember, I can have all my odds enhancers in my favor, talking about the moving average piercing the 200, the RSI climbing above 80 like it has, downtrend, obviously if there's an edge finder reading on it, bearish, which it's not. But I make all of my decisions once price collects unfilled orders from a zone. But it looks like it very easily could be making its bounce from this former support line that we had right here, this blue dash line from back here at the earlier part of February. But again, for me personally, there's no supply zone. So because there's no supply zone, I ignore it. And not to mention the higher highs and higher lows on the 4-hour chart. So that's euro dollar. I just need more or euro Aussie rather. I need more information. Poxy, you want to see euro kiwi? Yeah, let's have a quick look at that for you. And I do know. Let me just go back over here real quick. Yeah, euro kiwi +6, and I think that's the only one. Now I like it, automatically like it from a currency strength perspective, Poxy, because the euro we just saw is one of our stronger currencies, right? 60% to Kiwis 28%. So just from a fundamental only outlook, I love it. Absolutely love it. What else do we have up here? Okay, we're not really getting any help from the big banks over here as far as the smart money. The crowd sentiment's helping us out. Euro Kiwi. Okay, we're trying to buy it because of the signal, but the average positioning for the average retail trader is bearish, and we like to look at that as a contrarian signal, right? And then obviously the technicals and the trend are looking good. So yeah, let's go have a look at this because it probably is going to be one of my favorites. Now, starting from the top, we got our 8 above the 21 as far as EMAs on a daily chart. The challenge is we have bounced into this supply zone confluence. Dang it. So we do have a daily 4-hour confluence over here, guys. Yeah, is that right? Yeah, so here's our gap between, on this candle here. Turn that back on. That's our 4-hour supply within our daily. So it's bounced into it. Unfortunately, not only did it pierce the daily, but it pierced the 4-hour. And you guys see that white line? That's my 1-hour. Did it touch the 1-hour? Looks like it might have, right? Yeah. So basically, it's touched all 3 sets of eyeballs, guys. Now retracing all the way down, and I do have an alert set here at 196.80. So that's probably going to be fine. I mean, the more I look at that, because this would kind of be my newly created, curve analysis, if you will. Swing low, swing high. This demand zone is obviously at the very bottom of the curve. Yes, it bounced into the supply zone confluence, but, if we kind of play around with some lines and, kind of connect like this, low point to a rising low point. I mean, all this is raising. All these higher highs, higher lows, that's a pretty picture. I could pick this demand zone, except remember, the banks want to buy as cheaply as possible. They want to go to the beginnings of these curves, whether it's on the lower end to buy discounts or on the upper end to short and premium. So, yeah, I really like this demand zone. I'm thinking that a push down from these 3 sets of eyeballs up here, we'll probably be exhausted by the time we get down here. And here's the cool part. What I would really like to see to help us out with this is price to not only come to the demand zone, but I would like to see price come in, deeper than or below the trend line I drew up. Because the minute price bounces, the minute price touches this zone, you're going to get buyers. The minute price pierces through it, you're going to get short sellers. The banks know that. So when the banks see these short sellers thinking this is breaking out, what's going to happen? They're going to be shorting right into and the banks are going to like this, the trading firms, everybody on Wall Street, because they can then take their shorts and let that fuel their buy orders along with the unfilled orders from the demand zone. So I would like to see price bounce into the zone, deeply, at least 50% in, to start collecting these short sellers' liquidity to inevitably push price up. That's what I would like to see, and then I'll be jumping in that trade as well. We're still quite a ways away. We're like, 80 pips or so, but I've got my alert set nevertheless. So, yeah, that's a good one. It's one that's on my list. I mean, I wished it would not have yet touched these sets of eyeballs, but the good thing with this is if we do get price come down, bounce in, and push up, if that happens and we're live in this trade, I'm no longer worried about these overhead supply zones. In other words, I wouldn't necessarily be worried about taking a profit at the, just below the proximal line. At that point, I would worry about taking my profit at the top. Does that make sense? Because, yeah, again, that changes everything. This right here would normally be my profit target. But because it's already touched and taken this liquidity out, that would make me a little more comfortable about putting my take profit at the top. So anyway, hope that helps, guys. My goodness, my alarm just went off. It's already 30 minutes. Let me just do one quick check real quick. Yeah, movies, Airplane. Yeah, guys, go watch Airplane this weekend or this week. Watch it with, well, I don't know. You might not watch it with your younger kids because wait till they're like 12 or 13. But either way, guys, that's all I've got for you today. I'm going to go to work. We'll be back tomorrow. Have a wonderful day and be safe with all this craziness. Cheers.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.